Oh, I was punching out the debt, y'all. I was punching out all the things that I ain't want, all them bad, the debt. Yeah, well, upper company.
Exactly. And
Good
so
morning.
when
Good
we
morning, Crystal.
Good morning, everyone. Jumping on. Thank you for joining us for another exciting episode of Financial Fed Friday. All of our Facebook followers, good morning. For those of you that are watching us on YouTube, good morning, good afternoon, good evening, whatever time of the day it is where you are, welcome also. So we always like to play a little music at the beginning of our Financial Fed Fridays, because when we talk about money, music uplifts us and we want you to be excited about money. So welcome everyone. This is Financial Fed Friday. I am your co-host, Darlene Jenkins, and my other co-host,
Dr. Rita Bailey Rowland.
Dr. Rita Bailey Rowland, and we are your Financial Fed Friday team. So Financial Fed Fridays, this is a webinar that we do every other Friday at 10 a.m. Eastern Standard Time. I'm going to ask everyone right now, some of you have been checking in, just to check in real quick. Let us know where you're watching us from, because we have viewers all over the country, and now, Rita, even all over the world. Our YouTube followers, thank you so much. So just check in real quick. If you're on Facebook, let us know where you're watching us from. If you're here on the webinar, let us know where you're watching us from. Thank you, all of the call-in listeners. We see you. We know you're there. And so we do this webinar every other Friday, as I said, at 10 a.m. Eastern Standard Time. And we broadcast it simultaneously on Facebook. And you can also jump over to our YouTube channel and like and follow us there. And during the Financial Fed Fridays, what we're doing is just pulling back the curtain so that you can get an in-depth understanding of not only your federal benefits, but also the best retirement investment options. And so you can register if you want to join us live and join in all the fun and talk back and forth to us while we're doing this. You can register at www.ritabrowlandevents.com. Or if you're on Facebook, you can like us at Your AV Solutions. And of course, on YouTube, please subscribe and give us a thumbs up when you see the broadcast. Now, before we jump into today's information, I just want to let you know that what you're seeing on here is going to be general in nature. Why do we do that? Because we don't know everyone that's on here. So we cannot individualize this presentation. But guess what we can do? When you reach out to us, all of the information that you see on here, we can customize it to fit your particular situation. So thank you so much for understanding that this is going to be general in nature, and just apply what we go over here where you feel it best fits your situation. Oh, I see you all checking in. I have someone here from Texas. Welcome. California. Thank you. You are really making a sacrifice because it is 7 a.m. over there. Thank you so much for joining us. Of course, we have Washington, D.C.
Got Philadelphia.
All right, we got someone from Tennessee. Welcome. Washington State. Hey, thank you so much for jumping on. And of course, all of your phone listeners, we appreciate you getting on with us. And thank you for checking in as well. But don't forget, subscribe at the bottom and give us a thumbs up on YouTube. So the purpose of this Financial Fed Friday series is just to help you understand your benefits that you have on your job, your money personality, because that dictates what your spending habits are, the spending habits have developed. And then we want to offer and support you solutions that will enable you to reach your financial destination. And that's what your Financial Fed Friday team is here to support.
Absolutely. 2019 is the year to sacrifice, Darlene.
Absolutely. That is the theme for this year, the year of the sacrifice. And Rita, tell them why this theme is so important.
I think because, I thought about it during the beginning of the year when the shutdown was going on. And we got so many phone calls and people were concerned and worried that they didn't have enough money to last. They didn't know how long the shutdown was going to happen. And just one night, the Lord was like, this is the year of the sacrifice. So I talked about it at church. It's like we have to be willing to give up something to get what we truly want. And so for me, I'm always concerned about the old reader, the one who's 75 and 80 and 85 and 90. You know, I'm trying to live long, so I'm going to go to 95 at least. You know what I'm saying? I got to think about her. So for me, it's like, what am I willing to sacrifice so that she can have the life that I envision for her? That means I may need to sacrifice some eating out, some movies, some clothes, some shoes, some things that I don't, that I like to do that cost money. If I can save that, if I can invest that, and then we can begin to have that habit in 2019, it can be something that because once we have the habit, Jenkins, once it's here, once we start to live on budget, we stay there. And it doesn't take away our life. It just, what are we willing to sacrifice? Do you need to go to the movies every weekend? Do you need to buy clothes every time you get paid? What are you willing to sacrifice so that the old you don't have to sacrifice? Because that's what's happening. My grandmother, I love her. She rest in peace. But she always said, babe, I'm on a fixed income. She got that one little check. Everything came from the dollar store. And God, I bless her. And she did so much for us. But I don't want that to be my story. So what am I willing to sacrifice today so that the old me don't have to?
Absolutely.
The older me, yes.
And if you haven't had an opportunity to view our prior broadcast, you want to go ahead and either go to our website, and we'll give you that information, www.yourabsolutions with an S, inc.com, yourabsolutionsinc.com. And you can click on the Financial Fed Friday tab, see all of the broadcasts there. Or like I said, you can find it on YouTube and view all of the information there. And sacrifice becomes so important, as Rita said, as we prepare for our older you. We have obligations, we have children that we may need to prepare for as well. So it's just a myriad of things that where sacrifice will become. We're going to have to make some sort of financial sacrifice. So this month, April, is Financial Literacy Month. And so we're going to be going over various topics, just giving a broad overview of some of these financial topics. So today, we're going to be talking about the different asset classes. What are your financial assets? What are the different classifications in the asset classes? So,
and why that's so important, you guys, because a lot of times when you go places, people want to know your net worth. And it's unfortunate. And I don't know who's on the call. I know people calling from Washington, Texas. And I'm not just talking about African American, but the net worth of African American was like below 25,000. And one of the things we don't always know when you ask them, what is your net worth? People don't even know what their net worth is. And so having assets are part of your net worth. Your net worth is your assets minus your liability equal your net worth. And so it's important for us to know that we need to have some assets so that we become worth something. So understanding what they are and how they operate is important.
Absolutely. So let's just jump into what is an asset. An asset, and it's right here on the screen, it says it's a resource that's owned or controlled by either a person or a company regarded as having some sort of economic value, with the expectation that in the future it's going to have some sort of benefit that will be available to meet your debt or commitments to legacy. You hear that? Debt and commitment to legacies. What are we going to leave the next generation? So that's what an asset is. And most of the time when we think about different assets, we're normally thinking about physical assets, things we can see, touch. But one of the first assets I want to speak about is an annuity. You might say, well, Darlene, how is that an asset? Well, this asset, like Rita said, she's trying to prepare, she's willing to make the sacrifices for the lady Rita that's coming. That's our elderly self. So we're going to need to have an income that we will never outlive, because statistics show, research has shown that retirees' number one concern is, will I have enough money and running out of money in retirement? So you want to have an asset in your portfolio, i.e. an annuity, that will provide you with that peace of mind, because an annuity will help you get an income that you cannot outlive. You take a pool of money, because we're all saving for retirement, and we turn part of that pool of money into a paycheck. Just like you get a paycheck now, every 2 weeks you're getting paid. Well, you want to make sure in retirement that every month you're also getting a paycheck. And that's what an annuity can do for you.
The next one is asset classes. So this is everything from your equity, that's stocks. And your stocks just mean you're actually purchasing a piece of a company. So you got 3 shares, you got 100 shares. And I had a client who invested in, I'm just going to tell you, she invested in marijuana stock when it was pennies. She sold the stock when it was like $50. So she invested like $90,000 all of her stock. She was able to sell a part of her portfolio to buy a $400,000 house with cash. That's stock. So she invested pennies, dollars into a asset and then sold it to create money. Your real estate, not the house you live in. Even though in most time when they're looking at your net worth, they don't include the house that you live in. People call it an asset. It is an asset, but it's not a financial asset unless you're going to sell it, take the equity out of it, and live off of that. If you're living in it, you don't want to use that as your financial assets for your future, your cash equivalent. That's just cash in the bank in your savings account, your money market, cash underneath your bed. Grandma got some money stashed somewhere, and we all probably become my grandma, because I'm learning as this world changing, ATMs, cash go out, power go out, you need some cash. Commodities, those are your gold, silver, those are assets too, and fixed income. So you want to look at, and what's comfortable for you may not be comfortable for someone else. I love real estate, but I don't want to do real estate as a landlord. I don't want that headache, and I don't want to have to do the fixing up and stuff. So there's other ways, and we're going to have a speaker on in a few weeks to talk about other ways to do real estate investing. Of course, there's always cash. That's just easy. Cash is always easy to do. That's just cash. So we ain't even got to explain that. Okay, we just talked about, is your home an asset or is it a liability? Your house can be both. So if you still have a balance on your mortgage, then your house is both an asset and a liability. So the face value, so let's say your home is worth, if you could sell it for $400,000. You owe $200,000 on your mortgage payment. Then your net worth is $200,000, because net worth is assets minus your liability equal it. Now, if you got real estate property, the value of it is still an asset, because this is your investment and you can have an equity in it. So that's money that you can use to leverage to buy more assets. So I have friends who do a lot of real estate, and one of my clients have 12 different homes that he real estate. He refis one to buy another one. He may sell one to buy 2. And so it is considered an asset.
Then we have specially designed life insurance. This is so important because on a prior broadcast, we spoke about tax-free retirement income. Other than the Roth IRA and municipal bonds, specially designed life insurance is the only vehicle that will allow you to take money out tax-free. And remember, we said an asset does 2 things: family legacy and debt. So there you have it. When the cash that's in there is of value to you while you're living, helping you have a tax-free retirement income stream. And then when you pass on, it leaves a legacy, the face amount of your life insurance, for your family that's tax-free. Mm-hmm. I don't know if you all caught that, but that is tax-free, because in retirement, you have to also look at your silent partner in all of your assets, and that is the Internal Revenue Service. They are looking for their portion. And that's a whole nother webinar that we're going to be doing on retirement planning and taxation. So that's
all right. And of course, just having some intellectual properties, your trademarks, you got something that you invented, all those things are considered assets. And there are a few other, but these are the ones that most people may have on a regular basis.
Exactly.
So now when you think about your assets, you're looking at your asset allocation. So if you work for the government, I'm just going to use you because I know your stuff. You may have a thrift saving plan, and you got the G fund, the F fund, the S, the I, and all of those come with a different risk. And of course, is a return. And so when you're thinking about your different classes, you got to think of your risk and the potential return. And you want something, your balance is that you don't want all of your assets to respond to the market fluctuations at the same time and in the exact same way. So when interests are up, then bonds are low. When bonds are up, interest is down. When the stock market is soaring, the real estate may be down. So you want to make sure that you have a diversity so that if you got all of it in one type of asset, it's possible if that assets drop, your entire pool of money, your assets have all taken a dive at the same time. So you want to make sure that you have a balance. And so you want to look at what's best for you. So when you're thinking of your asset classes, what's best for you? And even though we talk to our co-workers and they're making a lot of money, it's really important that we understand what's important for you. So you look at down at the bottom, you may have 60% in stocks. You have 20% in bonds. You have 10% in real estate. And we always suggest that real estate is good, but don't go more than 10% because it could be some of the most riskiest, that and stock. And then you have 10% in cash alternative. You may just have some cash in the bank. You have a CD. You have your money market account, your savings. You want to make sure you have some liquid cash on hand. So it's just very important that you have a diversity. And so I met with a client yesterday. She's going to be retiring in a few months, and she had all of her funds in the C fund risky. We made a decision to move it to something safe. And even though she may take the risk of not earning a higher amount, but she has the comfort that she can go to sleep every night till she walk out that door, knowing that at the moment she's about to retire and her retirement takes a big plunge. We don't want that. So understanding that you may be risky now, but as you get closer to retirement, you may decide to move that risk to something that's safety.
Right. And now we're going to look at a quick video on just some basics about stocks and mutual funds.
Stock represents shares of ownership in a business. Owners of stock, also known as shareholders or stockholders, actually own a piece of the company the stock represents. When you buy shares of stock, your percentage of ownership depends on how many shares you hold in relation to the total number of shares issued by the company. For example, say that Company A has 1 million shares of stock outstanding. You decide to buy 100 of those shares. This means that you own a tiny fraction, less than 1%, of the company. The primary benefit of stock ownership is the potential to share in the company's success. You can do this in a couple of ways. First, if the company does well and is expected to continue doing so in the future, your stock shares may increase in value. This is known as capital appreciation. If your stock appreciates in value, you may decide to sell your shares at the higher price. If you do, you will have what's called a capital gain. Second, you may benefit from stock ownership through dividend payments. Many companies distribute a share of their profits to shareholders through dividends. If you receive dividends, you may choose to receive the payment in cash or reinvest the proceeds to buy more stock, which will increase your share of ownership in the firm. On the other hand, if a company does not do well, the stock's price may decline, dividend payments may cease, and you run the risk of losing some or even all of your investment dollars. To help manage market risk, some investors choose stock mutual funds, which are pooled investments that combine shares of many different stocks into one portfolio. A stock mutual fund can provide greater diversification, spreading the investment risk among dozens to hundreds of stocks. Professional managers choose individual stocks for the fund based on its stated objective, which can be found in the fund's prospectus. The prospectus also includes information about the fund's underlying investments, risks, fees, and expenses, and should be read carefully before you invest or send money. Investing in stocks and stock mutual funds can help you pursue long-term goals, as long as you fully understand both the potential risks and rewards. Before choosing any investment, review your financial goals, time horizon, and risk tolerance. Lastly, there are several other points to consider about the potential risks and tax obligations of investing in stocks and stock mutual funds. Consider speaking with a financial professional before making any decisions.
So hopefully that provided you all with a basic understanding of stocks and mutual funds. Our job here, as we stated earlier, is just to give you some of the best information to help you reach your financial goal. But you need to reach out to us so we can help customize. You have questions, feel free to email us or call us directly. Put in the chat box any questions you may have, or ask us a question. So as she was talking about the stocks going up and down in the mutual funds, there's also a cycle of market emotions while this is going. The two things happening are not independent of each other. Why is this important? Because we are trying to make money during retirement, so we put our money in the market. So now while we're going up, there's a whole cycle. So, and right now, we're in this part right here. So when you first get into it, you're very optimistic, you're very excited, it's very thrilling, you're making money, you're just euphoric. And then when 2001, 2008, 2009, just last year, last quarter hits, now you're at the point of your maximum financial risk. And guess what happens? Because now the market is going down. Remember, she said the stocks could lose value and you could lose all or some of your money. And you are emotionally very aware of that. So now you have anxiety. You're not sleeping at night. You are in denial. We don't open up our statements because we don't want to see what the bottom line number is. What does that red number indicate? We hate seeing red on anything, even on the streets at the stoplights, right? That means it's a warning, you need to stop. But when we see it on our investment statements, on our retirement accounts, we're upset. Then we go into denial, and now that creates fear within us. I need to get out of here. Now we're in desperation. We're starting to panic. But then we say, okay, well, I just have to deal with it. I'm not going to look into it. I just don't want to, I don't even want to talk about my money. It just makes me feel bad. This is not going on. I don't want to, think about what's going on. But then the market starts coming back up. And now you feel hopeful. And you feel really, I'm going to make my money back. If you're still working, you will make your money back. And that's something another webinar we'll get into. How does a downturn in the market affect your retirement income when you're pulling from it and the market is pulling from it? Remember, statistics show that the biggest concern of retirees is running out of money. But then what happens now? The market is going up and we're happy and we're right back at the start of the roller coaster again. And I have a saying that euphoria and amnesia are a Molotov cocktail for your finances, because we're all happy going up.
When it's going up.
But we forget about the going down. So we don't make preparations for a paycheck that we can't outlive. Remember, we went over the annuities. So when it goes down, now our hair is flying back in the wind and we're all concerned. Isn't that right, Rita?
Absolutely. And I think it's just when, I wanted to make sure you people understand this because you have to take your risk tolerance and match it up to who you are. Darlene may be a very safe person and I live on the edge. We may can't invest the same because safety for me is too slow. I need a little bit more excitement, where for her, risky could leave her not sleeping at night and her heart palpitation, now her blood pressure up. So you need to understand this. And I have a client, he retired from the government. He came to me. He has about 600 something thousand in his thrift saving. He's retired. He said, Rita, I had it was like almost at 900. I've lost a couple hundred. So I'm just waiting for it to get back up to the $1 million. He said, but when it drops down to just 500,000, then I'm going to just come on over here and move my money. And I'm thinking, like, you're retired and you're willing to take the risk of your money getting to $1 million. If 500 is your low number that you're willing to invest, move your 500 to what's safe, leave the rest and let that get up to another 500,000. You still have your $1 million, but you got this $500,000 safe. For somebody who wants to preserve their safety in retirement, that's what they want to do. But for him, he's okay with taking the roller coaster ride. And when he gets to his bare minimum, then he'll move it. So you got to determine, are you willing to possibly lose another 200,000-300,000 just so you can get to the $1 million? Or are you willing to park 500,000 safety and let that other 189 do its up and down and let that get to another $500,000? You still got $1 million, but you don't have 1 million in one pocket or one type of plan that's doing this and that you can't breathe at night. So it's just important to understand you and not your neighbor, unless you're willing to take it and deal with it, or you put, like Jenkins said, you're doing this with your eyes closed. What's in your account? Many clients don't even know what's in their TSP account, can't find their PIN number, haven't looked at a statement. That is your money. If I ask you your Pepco bill or your cell phone bill, you know it to a T. But when they ask you about your asset, your net worth, you're not sure. You need to understand how all of this plays together.
Exactly. And these are some of the things that you see on here that we start saying to ourselves as we're going through these various emotions. Wow, when we're making money, I'm smart. Yes, I did the right thing. But then when it's going down, how could I have been so wrong? And then when we're in denial and we're feeling anxious, we say, well, that's just a temporary setback towards, I'm a long-term investor. And you do need to have that mindset when you are working, but it doesn't work the same when you are retired and pulling from it. And I really appreciate you all engaging. And so we had someone to ask Rita, what is time horizon?
It's just, go ahead.
Your time horizon just simply means how many years until you stop working. So if you are 55 right now and you're working on your job and they say, well, you can retire at 57, but you choose to go at 60. So your time horizon is either going to be 2 years or another 5 years. It's the time between where you are now and when you decide to hang up your computer keyboard and start living in retirement. What were you going to say, Rita?
I was going to just say, and that's so important when you're thinking about, your risk, because if you're 25, 30, 40, and you got another 15, 20 years, then you may want to have your money in something that's risky, knowing that it's a temporary setback. I got a long time in here. I got another 15 to 20 years, and I'm okay with taking some dips, knowing that I can get some highs, because we know that this whole thing is a cycle. It's going to go down. It's going to have some uptime. That's just how it is. So if you're willing to it, so your time frame is important. But if you feel, within a year, from retirement, you may want to look at what pool of that money that you don't want to lose. You may want to move that to safety, and the pool that you're okay to lose, then you can leave that at risk. So that time horizon is very important, Crystal, very important.
Exactly. And something that I'll just speak to really quickly before we move on. And we appreciate you hanging in here with us. We're almost done. You also need to look at how you are saving in retirement. Is it tax deferred, or are you saving tax free through the Roth option? And if you don't know that or understand, we're going to do, let's do a webinar on that. Maybe we will bring that up so you can get a thorough understanding of how you should actually be, which way you should consider investing your money or saving your money, not so much investing, but saving.
And I would say too before, because we're at the end. Next week, you guys, we won't be on, but check out our Facebook page, because every day, next week is planning for retirement week. So it's all about planning for retirement. So every day we'll have a different article on our Facebook page. So make sure you join us on Facebook, and we'll probably have it on our LinkedIn page as well. So make sure you join us there and get a new article, because remember, we talked about this, and it maybe you wasn't on that call. When we're going to get married, we got a 4 to 5 hour event depending on how long we're going to party. But we plan that thing 2 years out, a year out. We got an event planner. We hired a special person who has expertise in wedding planning to guide us through a 4-hour event, so we can feed some people and some spectators to watch us say, I do. But here it is, our retirement planning. We need this money to last us for as long as we live. We don't always hire a professional who can help us strategize for it. And we don't necessarily plan for it a year or 2 out or 3 or 5. We just like, okay, this one I'm retired. Let me fill out my paper and I'm gone. So do you understand how that could be a little, we plan for a 4 or 5 hour event, and we know for marriage, I don't know about y'all, I got a little over 5 years. That one little event, that's the joyous occasion. The real work didn't come until afterward. We know for retirement, walking out the door is just a small part. How do you maneuver everything? Healthcare, your Medicare, long term, how long I'm going to live? How long is my money going to live? What's going to happen? Am I going to stay in this house? Are we going to downsize? Are we going to move? That is real planning. And as this slide say, planning is bringing the future into the present so you can do something about it now. I'm looking at this old girl and saying, what will this old girl need in every aspect of my life? And so today I must plan for her, because my nieces and nephew love me, but I don't have no kids. And Jordan already said, the Darlene daughter said she putting all the old people in one house, and she's not going to visit us in 12 houses. She want me, my husband, Darlene, her future husband, her Aunt Sophia, and all of us in one house. And when she come visit, she can take care of all the old people at one time. But I get her, because I suggest that we move together and we save our money and enjoy retirement. But that's another whole webinar too, because how do we create a real wealth? Because they say people who live together, have somebody to talk to, live longer. So y'all keep wanting to live alone. You're going to be gone. I'm going to live with somebody talking to every day. I don't care if we fussing.
That's right. That's right. That's a good one right there. So what's going to be right for you? We don't know. It depends. And if you sit down with us, we can walk you through that and guide you. So contact us today so that we can map out a strategy that can help you reach your financial destination. So how can we help you do this? We help with life planning, questions to help you manage in retirement. Some of those things Rita just said. Have you made plans? What are your plans to triple your income in retirement? Because guess what? You're going to have a lot of things pulling on your income, rising healthcare costs, inflation, the stock market potentially. So where are you going to get this money from? How are you going to make your money last? Also budgeting. That's one of the key components that we can help you with, determining what your income needs are and identifying your sources for retirement income, as well as account management. IRAs, what are you going to do with your retirement plan? Roth conversions. Do you want to turn some of that tax deferred money into tax-free money? Would that be feasible for you to create that legacy if you don't need your income for your future generations? And this also establishing a suitable withdrawal plan, and also helping with those required minimum distributions, because the IRS said at 70 and a half, we've given you enough time to keep your silent partner silent. Now we're speaking up and we want our share. That's from the Internal Revenue Service. Also, portfolio management, what sort of financial products, what is the taxation considerations when you are using different financial products. So all of that is important, and that's how your Financial Fair Friday team can help you, and all of the associates here at Affordable Benefit Solutions can help you navigate these retirement uncertain times right now. So we at Affordable Benefit Solutions and your Fed Friday team, we are a full service financial solutions firm. So we help you, as we just said, with your retirement planning, estate planning. How are you going to most tax efficiently get what you have accumulated to the next generation without paying a piece, not only to the Internal Revenue Service, but for some, if you don't have the proper estate planning documents, also to your state taxes. Also, we offer our life insurance services. We can set you up with those specially designed life insurance policies that offer you tax-free retirement income, but just basically protecting, some of you may just need a basic policy to help protect against your untimely death, or when we do, as my grandmother used to say, we're here visiting, we're all going to cross the river and leave eventually. And when you do, are your family going to be any worse for you leaving? So just guarding against just traditional financial loss when the breadwinner is gone. Paycheck protection. We protect our phones. We protect everything, our car, but we don't have any disability insurance to protect the things that pay for all of that, our income, and of course, long-term care. That's our retirement income protection plan, because long-term care, healthcare costs are rising at 3 times the rate of inflation. That's going to be a major draw on your money in retirement. And of course, for a lot of people out there, credit and debt management. We have programs that can help you not only fix your credit, but give you a succinct plan to help you get out of that debt as well. All is not lost.
And I tell you, it's so important, Darlene, that people actually sit down and get your consultation for us, because you join us is free. What's the craziest thing, that people feel like they're not together, so they don't want to call us until they get themselves together. Where you 40 years old, you 50, you're not together. I'm not judging you, but maybe your way of doing it hasn't worked. So reach out to some people who can actually help you get it together. And yesterday we was talking to someone about estate planning, and everybody always, when you think of estate plan, they thinking about what is your estate worth. But your estate isn't just your money. Your estate is your life. Your estate is your being. If I'm out of my mind, who do I want to take care of me? If I have dementia, who do I want in charge of my healthcare decision, in charge of my assets? I may want somebody in charge of my healthcare, but I don't want them in charge of my money. They're very compassionate and they'll take care of my health, but they may spend my money. See, it's not just about what are you worth. I'm only worth $1 million, so why do I need to protect it? Well, you're going to spend less than 1% to protect your $1 million, plus protect everything about your being is a whole lot more. So sitting down with some professionals to help you understand how to really strategize your future, every part of it, from your budget.
From your budget all the way down to your income, withdrawal streams of money are all very important. So this is our contact information. We are the people, we believe we are the people that can assist you in all of these aspects. And I hope, can someone just type in and let me know if you can still hear me, because I don't know if it's me that's frozen or if it's Rita that has frozen. If someone could just chime in really quick and let me know. Let's see. It's Rita. Okay, great. Thank you, Jerry. Thank you so much. So yes, this is our contact information. I didn't want to leave you all hanging. So yes, so please call us so we can put together that plan for you. For those of you that are listening to us on the phone, you can reach us at 301-577-6340. You can email us at ff@yourabsolutionsinc.com. And of course, you can always go to our website at www.yourabsolutionsinc.com. And if you missed any part of the broadcast, if you got on late, whether you're on Facebook or you jumped on the webinar in the middle, you can always go to our website at www.yourabsolutionsinc and catch us there, or head over to our YouTube channel. and like us and subscribe there. As a matter of fact, when we get off of here, get over there and like us and subscribe to us on YouTube. You can search for Financial Fed Friday or for Affordable Benefit Solutions and look for our logo, and you'll find us there. So that is everything. I really appreciate you. Thank you, Ronnie. I really appreciate you all hanging in here with us. Next week is going to be, next 2 weeks is going to be exciting when we start talking about mental health and our money. So I appreciate your time. Thank you for joining us, and I look forward to seeing you in 2 weeks on the broadcast. And when you come, bring one. Spread the good news about the Financial Fed Friday team. Thank you, everyone. Have a great weekend or strong beginning. Any questions? Does anyone have any questions? Okay, well, everyone, enjoy your weekend. Thank you.